for interaction with Sri Sudhanshu Prasad, DGM, RBI, and Ms. Usha, Manager, RBI, in charge of FDI. Welcome to interaction exclusively on FDI matters. Thanks for sending out many of your queries, which has already reached them. Even if you are having certain additional queries, you can certainly raise once these questions are addressed. Now I request CSBangalore to introduce our guest today.
Good morning, friends. Mr. Sudhanshu Prasad, Deputy General Manager, Reserve Bank of India, Foreign Exchange Department, Bangalore. Mr. Prasad has 17 years of experience working in the Reserve Bank of India. He has exposure in departments dealing in banking policy, risk management, particularly operational risk management, financial inclusion, and is presently heading the Foreign Exchange Department in Bangalore. He has also worked on formulation of resolution regime for financial institutions in India, the further work for which is underway and is being undertaken by Government of India and Reserve Bank of India. Thank you, sir, for coming here. May I request Madam Sharda, the immediate past chairman, to give a moment to the bouquet. The next speaker, Srimati Usha R. Rao, Manager, Reserve Bank of India, Bangalore. Srimati Rao has 37 years of experience in Reserve Bank of India. She has worked in various departments in RBI Bangalore, namely Issue Department, Department of Banking Operations and Developments, Public Debt Office, Department of Banking Supervision. She is working in, presently she is working in Foreign Exchange Department, handling foreign direct investments, full-fledged money changes, and inspection of foreign exchange dealers. May I request Chairman, sir, to hand over a bouquet? So today's discussion will be moderated by Sri Kailasam S., whom we know is a company secretary and financial controller in Unisys India, Bangalore. Previously, he was working as head of corporate affairs and internal audit and company secretary of CS India Private Limited and Saskins Network Engineering Limited, Bangalore. Mr. Kailasam is a master's in graduate and is a member of our institute as well as the Institute of Cost and Works Accountant, having more than 20 years of experience. I would also like to highlight that Mr. Kailasam is one of the coordinators of entire this FEMA capacity building program, and thanks to his effort, then the coordinator, Madam Sharda, Kartikan Rangarajan, whether he's here, I don't know. Thanks to our chairman. So this entire program has been set by them, and that is why we also have Mr. RBI dignitaries over here. Besides, Mr. Kailasam also gave a half-a-day session on FEMA covering export and import of goods or services, current account transactions, annual return on foreign liability and assets, FLA, compounding of offence. Thank you, Mr. Kailasam, and over to you.
Morning, professional colleagues. Now this session is mainly opened up for Q&A. It is not only restricted to FDI. I wanted to make it very clear where and which part of the area of FEMA, if you feel that any questions will be asked, your RBI dignitaries here can raise the question to the extent I am aware of that, we'll certainly try to clarify. And let the question be focused only in a general in nature rather than bringing the company situation. So the more well communicated problem is half solved. So the more the clarity you put the question, probably the dignitaries will be able to answer the questions. Don't restrict, it is not restricted to FDI. Could be FDI, ODA, compounding, annual return, export of goods, realization, netting up, whatever you wanted to ask. To the extent you are aware, you wanted to know, you are welcome to raise the questions. And the questions which we are not able to answer today, probably I would request you can submit it. We will try to get an expert opinion and we will try to circulate it back to the people. Yeah, whichever way. We'll try and address as many queries as possible today, and then which is not possible today, we will get back to the experts, and then we will get back to the queries as soon as possible. Over to dignitaries. You can raise the questions.
We can start with the sentence.
The first question is on pricing under FDI policy. Master Circular on rights shares. The price of shares offered on right basis of the Indian company to non-resident shareholders. The question is very much there. The query is, I'm straight away going to the question. There are many cases, situations where rights issue of shares may be made to the non-resident only on renunciation of right shares by resident shareholder. In such a case, how the pricing to be dealt with and which price to be considered.
Thank you, and good morning to all of you. The moderator has tried to not moderate the questions. See, what I had suggested to your chairman, that I'll be focusing on foreign direct investment today. Okay, but still, because as far as it relates to ODA and external commercial borrowing, all such cases are dealt at our central office, not in any of the regional offices of Reserve Bank. But mainly what we operate here in regional office is pertaining to the foreign direct investment and the trade transactions, that is export, import, and other miscellaneous remittances, which specifically relate to your purchase of immovable property and other non-trade current account transactions. So let's focus on foreign direct investment. As I see what the queries which were put forward to us in advance, we see mainly most of the questions, majority of them pertain to pricing guidelines. So if the shares are issued on rights basis, you have to comply with Regulation 6 of FEMA 20. FEMA 20, I think everyone is aware. Yes? Please give response, otherwise I'll have to go back and tell you what is FEMA 20. So, the first question, that is what pricing guidelines should be followed in case of issue of shares on rights basis. So you have to comply with Regulation 6, which says that if the company is listed on recognized stock exchanges, then the issue of shares will be decided by the company itself. Okay. However, if the company is not listed on stock exchange, then the issue price should not be less than the price which has been offered to the resident shareholders for rights issue. Okay. So it has to be either the same or probably more. Okay. You can ask.
Sir, if both the shareholders are foreign companies, both the shareholders are foreign companies, where allotting shares at what price? How the pricing should be? Both are only two shareholders, and both are foreign companies.
Probably you will have to come out with a fair value. by the chartered accountant.
Yeah, we are doing that, but in most of the RBI circulars, what it says is that it should not be lesser than the price at which shares are allotted to the residents.
Yeah. See, what we understand when we frame guidelines, we don't foresee that only the foreign investor will be the shareholder. We see it is an Indian company, right?
Yes.
When an Indian company issues shares on rights basis, it gives an option for subscription to all the shareholders, including the resident as well as non-resident. So what we foresee is that when we do that, when the company does that, it gives a price to a resident shareholder also. So we say when you allot to your non-resident shareholders, then it should not be less than this price. If you don't have any resident shareholder, then probably you have to go by the fair valuation as per internationally accepted pricing methodology and duly certified by the chartered accountant or the SEBI registered merchant banker.
Thanks. Thank you.
Normally may not be less than face value.
No. Face value will be probably 10 rupees. So,
Real value may be much higher.
you can issue with a premium.
Yes.
So, issue price should not be less than the fair value. Face value does not play here.
Sir, for rights issue under the Companies Act, we don't have any pricing restrictions. So we can issue it at 10 rupees also. So if we have a group of existing equity shareholders with a mix of residents and non-residents, and if we are doing the rights issue of 10 rupees, say the fair market value of the share is say 100 rupees, while the face value is 10, because there are no pricing restrictions for us under the Companies Act for rights issue, we give it at 10 rupees. Can we do the same for non-residents as well under the rights issue?
That's what Regulation 6 says that only.
Yeah, so
That,
we do it at 10.
if you are allotting a share at rupees 10 to your resident shareholder, you can as well allot to at the same price to your non-resident shareholder. It should not be less than the price which you are given to the resident shareholder.
Okay, but only when I have only non-resident existing equity shareholders, then we see.
Well, probably fair valuation has to be.
The thing is, don't you feel it is discriminatory when you allow for Indian shareholders, even at par, for rights issue, in cases where 100% shareholding which is permitted, 100% shareholding by the NRIs is permitted, don't you think that it is discriminatory?
I think
The regulation
you
itself.
can do that. When there is no valuation is
For
required,
rights issue I am talking about.
right?
And you can issue at par, so far as resident Indians are concerned. In the case of companies where 100% is held by foreigner,
You can.
why not you issue at
10 rupees, yeah?
See, when you issue a share to any shareholder, will you issue at a 90% discount? You will not. Company will not do that. They are issuing shares for getting money, right? For subscription to the capital, for raising the capital. So it's not that if the fair value or the market price of the share, suppose if it's listed on the stock exchange, if it's 100 rupees market price, they will not issue it at 10 rupees.
No, only for existing shareholders, right, sir? Is only talking
That's
about.
what I am telling you. That's what I am telling you.
Existing shareholders always they are preferred shareholders.
But it will be issued at a discount, but not to a 100% discount. Okay. Okay.
You can.
Should we move to the next question? This is regarding as you all know, the FDI compliant instruments, what are they? One is equity shares, another is fully and compulsorily and mandatorily convertible preference shares and ventures. Apart from these, from July 14, we have come out with a new instruments, that is partly paid shares and warrants, right? So you have 5 kind of instruments. In addition to equity shares and preference shares and debentures, it can also be issued with an optionality clause. Okay, that is from January 14. So you have these instruments which are FDI compliant. So when you are planning to issue convertible preference shares and debentures, you have to price it in advance, that is before issuance. The conversion ratio, that is when it will be converted into equity, say after 10 or maximum 20 years, as per the Companies Act. So when you convert that, it will be converted into equity, so the ratio you should decide in advance. And the pricing also has to be decided in advance because it is related to foreign direct investment. Okay, so the second question is talking about what would be the conversion formula. So fair value price at the time of issue of this instrument. Okay, so based on that you have to decide the conversion ratio, the pricing in advance at the time of allotment of debentures or preferences. Now the third question is related to reporting.
Delay in FCGPR.
Delay in
Filing the FCGPR forms and delay.
whether there is a delay in reporting where there is a delay in reporting the receipt of FDI and filing of FCGPRs, what is the time limit? Where under paragraph 91A and 91B of Schedule 1 of FEMA 20, you are supposed to submit advance remittance form and FCGPR, that is reporting the inward remittance in Annex 6 within 30 days from the date of receipt of the amount of consideration, and within 30 days you have to submit FCGPR from the date of issue of shares, that is reporting the issuance of shares to RBI. So if there is a delay, means it's a contravention of FEMA regulations. Okay. So when it's a contravention, it needs guidelines. Then is para 2 and 3, that is relating to if you have to take prior permission from Reserve Bank or Government of India. If you have not taken, then it's a contravention. So it relates to that. Then regulation 10A 1B and 10B2, that is it relates to transfer of shares. Okay, that is if there is a transfer of shares from resident to non-resident or vice versa, you have to report the concerned shareholder who is transferring. They have to report to the concerned AD bank within 60 days from the date of receipt of the amount or date of payment of the amount. If you are not doing that, then it's a contravention, and it is 10A1B and 10B2. In addition to this, there is Regulation 4, which a company, when there is a transfer of shares, a company can take in its books, record the transfer in its books only after the FCTRS has been certified by the AD bank. If they take it on record before the certification by the AD, it amounts to contravention of Regulation 4.
Yeah, that's permitted.
Yes.
That's permitted.
It's allowed.
On your own we can do that. It's not necessary they have to find out and do that. As a practicing company secretary, if you come across any contraventions, you can advise a client to go for compounding. The fee is 5,000 rupees. It was with RBI Bombay, now it is regionalized, if I am not wrong. There was a limit also now, that limit has also been abandoned now. Any limit they can deal with the contraventions at Bangalore itself. And the fee is a normal application with 5,000 rupees you have to remit. And then they will call for a hearing. Hearing is also your choice whether you want to send your representative yourself can appear. With my experience, I can tell you that normally they go through the promoters who are involved and what made the company to contravene the particular provisions. And sometimes I have come across, they do ask questions about your filing of annual return. Somebody used to ask me the question, where is the need for, if I don't file FLA, what will happen? Annual return of assets and liabilities. If I don't do, what will happen? The question is, as of today, It also amounts to contravention if you don't file an annual return. At higher level, when the hearing is going on, they do take stock of these kind of filings by the company. May not be known to you. They take an internal report and then arrive at the penalty volume. I have seen companies pay lakhs and lakhs of rupees in bundles. Questions not been asked, and then if you're not complying with it, as he rightly said that, it will be enforced to, it will refer to enforcement act. Remember one thing, we don't stop with that only with that paying penalty and close the chapter. All penalties and fines have been disallowed under the Income Tax Act. It will be added back to your income, and on that you will be paying 34% of the income tax. So it doesn't stop with only one. It goes further. So now it is being regionalized. There is no need for you to go to Bombay. It can be done at Bangalore level itself.
But one question, you raised to motor application. We see there are certain administrative procedures which have not been completed. Then we are forced to return back the application and ask the company to complete the procedural formalities. That is, if certain FCGPRs have been submitted, but it's not processed for account of certain clarifications, or it is not complete, so we return back the application. So once everything is complete, then only the processing of the compounding application is taken up.
And there will be an order at the end of the hearing, and against that order you are supposed to make a payment. After you effect a payment within 15 days, the time period is 15 days. Remember, a company has paid that on 18th day, and again it amounts to contravention. It doesn't stop there. So there is an order, and you make the payment within 15 days, and subsequently RBI issue a certificate. That is a concrete evidence to say that you have complied and compounding offences have been closed.
Is there any scope for condemnation of delayed payment of penalty for some reasons? Like in company law board, when they don't pay penalty within the time, that is compounding fees within the time, they have got discretion to grant extension of time for payment of the penalty.
Here also, my experience with the Reserve Bank and as well as FEMA is that simple. What is not stated in FEMA, you go to RBI, you get permission. 15 days is the one which is regulated by the order. You have to go and seek that, okay, I am unable to make the payment, I need another 15 days or 1 month or something like that, which again you have to take a written order. Remember, auditors doesn't stop with just seeing an order and compounding. They see the end, the certificate issued by the Reserve Bank of India, for them to report whether the contravention has been closed or not. So as you rightly said, that if 15 days are not able to do that, again the company has to approach, seek extension of time, and then make the payment.
And once compounding order has been issued and the company is not paid, we refer the case to DOE. So,
Is there a minimum amount for compounding fee?
3 times of the transaction value.
maximum amount is 3 times the contravention. 3 times of the contravention.
Maximum.
Normally they don't do that because they show many companies shut down the business, but that's not the intention of the regulatory authorities. Probably that's where they get into the people behind, who are the people managing the show, whether the company is in compliance with other things and things like that. All factors will be taken into account before they arrive at the quantum.
One more thing what we keep seeing, in spite of compounding the contraventions, again we start seeing the contravention. So you should tell your companies that the compounding facility will not be available to them for another 3 years from the date of issue of the compounding order. And once that is not available, then they will not be able to do various kinds of transactions.
Normally they don't
Contravention is a contravention.
And RBI doesn't directly jump into the companies, it's always routed through authorized dealer.
Generally what we have seen, we don't receive CO motor applications.
Unless you are
Generally, the companies may not be aware what the contraventions have taken place. So basically, they submit the application only on receipt of the letter from us.
Actually, text mentioned it says if you do a suborder, it will no more be a technical offense, it's a grave offense mentioned.
Contravention is a contravention. It can See,
And then legally complaint
I know.
companies, the
Why-
moment they find out, they want to come out.
why the company comes for
Yeah.
suo motu application?
There are companies who want to comply.
Because so now they have not approached RBI. We have so many of FCGPRs pending with us for want of certain clarification from the company. The time they are into certain transaction which relates to like sale of the shares or remittance or dividend, they come and sit on us. ECB, they are planning to raise external commercial product. So they come and come to RBI and start looking into their case. So there they submit suo motu application because they are in need of certain transaction to take place.
Sir, apart from the 30 days violation of ICSI submission and 30 days of FCGPR submission, if the shares is allotted after 180 days of enrollment, can that be compounded?
Yeah.
Paragraph 8 talks about that. Paragraph 8 of Schedule 1 of FEMA 20 talks about this, that you are supposed to issue the shares within 180 days from the date of receipt of the amount of consideration. If you don't do, either you should have refunded the money or you should have allotted within 180 days. If you don't do that, it's a contravention, but still you need to apply to RBI for seeking permission to allot the shares beyond 180 days or refund the money beyond 180 days. Okay? Or if a company allots they also allot beyond 180 days without seeking our permission. So that of course it leads to anyway it's a contravention.
So in a single application, we can file all the contravention that is
Yes.
Also, I just wanted to ask you that now the Companies Act now demands that we should do the allotment within 60 days. Would you mind taking up that 180 days to 60 days to the allotment?
The process is on. FEMA has not been amended in line with the Companies Act.
Yeah.
But there are work going on for rationalization of entire FEMA because FEMA, it's really a tough subject to study about. You have so many of regulations. FEMA Act itself is there. You have various kinds of FEMA regulations. Then you have various kinds of press notes, which are of course incorporated there. So, but there are still thought of that there are certain inconsistencies within the regulations. So we are into the rationalization and utilization of the existing FEMA regulations. So probably that time we are going to take it.
Yeah, maybe a small suggestion would be that wherever you would like to fall in line with the Companies Act, you refer to the Companies Act 2030 rather than mentioning the days. Today it is 60 days, tomorrow we don't know. Government demands and goes 90 days. Rather than putting the number of days in FEMA, rather you can refer that in the Master Circular as indicated in Companies Act 2030 from time to time.
Earlier it was this 180 days was not there.
Exactly. It was introduced in 2007.
November 2007.
Please note that very effective point she is making. I don't know how many of you heard this, what she told.
Generally,
She said-
people will be under the impression within 30 days, if you have filed it, you are compliant with the
If you have just
It's
submitted
not-
form 6, form,
Yep.
inflow reporting form, if you have submitted or you have submitted FCGPR form to ADE, so companies think that their work is done. It is not like that. Even if it is submitted within 30 days, it will not be considered. The whole form should be complete and correct. There should not be any discrepancy or there should not some attachments which are to be submitted along with the FCGPR or inflow reporting form. That has to be submitted in full. The whole set has to be submitted. Like KYC should be there, then FIRC form should be there. All those things, the company secretary certificate, chartered accountant certificate, it should be complete in the set.
All right.
Only then it will be considered, the date of submission of the whole set will be considered as date of submission. That has to be within 30 days.
FSCR certificate, self-attested holds good number.
No, attested by AD. Has to be attested by AD because AD is the one who is having your
Yeah.
amount here.
But I have a
He
small...
has to attest.
Please. No, I have a small suggestion. You have trained these ADs so well in these matters. My experience with ADs are totally different. Half the time you raise a question with them. I'm sorry to say this. I'm sorry to say this. I can tell you that my experience with them.